Do you spend most of your time these days on immediate concerns like some of those I just mentioned, or longer term concerns, things like demographics?
Well, we have to look at both. I think that the trick for investors who are investing for the long term, and I hope most people are, in fact, investing for the long term, but when you think about orienting yourself there, you have to understand what the big cycles are, but things like demographics are going to play out over a 30-year cycle, right? Things that you were just talking about on the air, that Mark was talking about, are really all about what's happening tomorrow and what's going to affect the way prices react right now, and that will affect sentiment. So you really have to think about both. And that's why when we invest money, we think about both almost separately. We have a part of our process that thinks about long-term capital market returns and how we want to strategically orient ourselves. And then we've got to react in the short term to all of the things you're talking about.
And obviously, given that you're so involved with retirement solutions in particular, you have to spend a lot of time looking at fixed income. So where are we in the cycle there? And is there any possibility the cycle could get pushed out of whack by any of the things we just mentioned, including a ballooning deficit?
Right. I think that deficit concerns are going to impact the fixed income markets. We don't think it's going to be this year, but it's clearly going to be out there weighing on the markets. I think right now we're at a couple of inflection points, and what makes it, I think, very challenging for fixed income managers, and why we think you really have to be very actively engaged in both duration positioning and security selection as you manage fixed income portfolios, is thinking about several things happening, right? One, this bull market in rates going one way on the long end, we think is over, and they are certainly going to stop going down and probably go back up. Secondly, you've got the Fed unwinding its balance sheet, putting out more securities. That's going to impact the technical flows. But last, you've got this other sort of technical factor with people like pension plans and insurance companies wanting to buy long-term fixed income. That's not going to go away. So talk about the demographic concern or the demographic influence on our rates. You have buyers out there of long-dated paper, and then last but not least, we are the high-yielding market in the government securities market right now. Right, our yields are points higher than the rest of the developed world, and so there will be a bid for our paper for that reason as well. So we think the curve will flatten. We think the long end of the curve will go up, but not as steeply as you might otherwise think.